We have some whitelist spots to give away. We're going to give away some to the members, and there's a couple for non-members. I know people will come in and out of an AMA just like they always do. But let's go ahead and get started, and we'll send those messages out to the winners after the fact. I don't want to interrupt the flow of this conversation. I had the joy and privilege to speaking with Alex and the team about the new project, and it's very exciting. It's very exciting. First off, why don't you go ahead and let's introduce who you are. I think some people, they know who you are, but maybe there's going to be people watching this later. A little bit about yourself, how you got into crypto, maybe something about your channel, and why, how you got here.
Sure, absolutely. So I've been in crypto since 2017. I had a good buddy of mine get into crypto literally right as everything was like pumping and then everything dumped. We're looking at ourselves as, was this just a scam? And so we didn't really truly know the full intent of Bitcoin or cryptocurrency at that point. And then 2020 rolled around because with cryptocurrency and Bitcoin in general for the next kind of 2 years, then I got to really understand a little bit more in depth of the value that Bitcoin has. And then everyone has their own perspective of if the different models behind Bitcoin. Is this the stock to flow model, or is it the halving cycles? Everyone has their own opinion. At that point, I went into the whole camp of the halving cycle. And I was like, okay, so I know Bitcoin's halving in 2020. At that point, I buckled down and I bought half of Bitcoin around, I think it was around 6,000 to 7,000. And I was like, you know what? I think there's a lot of potential in this thing. And next thing we see in 2021 is crazy. So it's just been a learning process to broaden my horizon outside of just Bitcoin and different opportunities. And then it was at that point, I'd always had a passion for passive income.
Yeah.
And the thing is, there's nothing more beautiful than taking some of your investments and putting it into a place that then generates yield or opportunities for you without you putting additional effort into it or having just some kind of side gig. And when I started my channel, my focus initially at that point was stocks. And because it was, for me, primarily, I really didn't know what specifically I wanted to talk about crypto, because there's just so many things you could, even though it's a small niche, so many things you can talk about. And so it started off on the passive income niche, talking about DeFi. It's been a learning lesson for a lot of us, obviously. And you have DeFi is the Wild West. And so crypto is wild. DeFi is even more wild. And then you've got your high risk, high reward, even within DeFi itself. So that's kind of where I pivoted. There's so many opportunities within passive income, opportunities within cryptocurrencies. You got to take a look at each one of them individually and see which ones fit your quote unquote investment agenda, because some are less risk adverse, some are more risk adverse. So it really depends on you as an individual, what kind of goals you have for your overall passive income strategies. But yeah, that's been me over the past 2 years. I have a fantastic community on YouTube, on Discord, a lot of great people that I've gotten to meet through that. And that's honestly been the most rewarding of everything.
Yeah.
I got to meet you, a sensei, got to meet a bunch of other people in this space. And like I always say, your network is your net worth. And a lot of the people, even the people on fraction mining, the team specifically, I've gotten to know because I've become friends with this person that was friends with that person. All of a sudden you become best friends. That's the beauty, is the community aspect.
Fantastic. I like to talk a little bit about this, right? Because you're a lot like me, right? You spend hours and hours every day learning, growing, sharing your wealth of knowledge with other people, helping them learn and grow, right? You've looked at all of these seasons, node season, staking season, all these different things, right? NFT season. You've looked at everything and you said, okay, I've identified what's working, I've identified what's not working, and you go into this fraction mining project, right? Walk us through the vision of fraction mining. What are you guys trying to achieve? What are you doing? And how is it going to work for the community and the people that want to invest in something like this?
Sure, absolutely. And that's the thing, is always going to see cycles, right?
Yep.
And typically those same cycles eventually die out. And typically the reason those cycles die out is they're trying to create and or force value out of something that initially derives no value. And so what I mean by that, if you look at code season, you look at the DAO season,
Yep.
you look at the play to earn, the move to earn seasons, those individually, all of those try to create, anyways, hypothetical value that if enough people believe there was value in it, it would be sustainable. But things like that oftentimes don't sustain. Oops. And that was the problem that I kept on seeing. It's just have a project with a great idea, but they're trying to create a superficial value. And there's only going to be so long something like that can last, only so far like something like that can go. But it was starting to get this idea as to what already has value that people want to harness that isn't available or readily available to them. And so having been mining cryptocurrency for a while, probably not as long as some others, but it was always one of the, out of all of my like passive income strategies, I had my GPU miners, I had some of my Asics, and I could always count on those, right? Regardless of whatever anything else happened. And that got me to thinking, like, what if we created a system and a service that offered something that already had value, that a vast majority of people already thought to be valuable, and harness that and bring it to the average person. And so having gotten to talk to other people within the community, now some of those people are part of the fraction mining team, is we all had that kind of similar idea that when you look at something that offers rewards, it comes to mining Bitcoin, when it comes to mining Dana, when it comes to mining Litecoin or merge mining Litecoin Doge, you've got some other mining opportunities out there. You don't have to create value. People already see Bitcoin as valuable. People already see, majority of people like the value Dana can drive. People, you have the small majority that like Litecoin and Doge, right? So when you already have value there, you don't have to force or create superficial value to drive audience to service or the product. And so that's how we started fraction mining, is like, when it comes to mining crypto, what is the thing that keeps people from mining crypto? So you can start at the problem and work your way towards a solution. And we started with the idea is like, there's primarily three things that keep people from mining cryptocurrency. Oftentimes that's the cost, the acquisition cost. You looked at some of the Dana miners, looked at some of the Bitcoin miners, absolutely ridiculously expensive. And I feel bad for some people that spent $50,000 on a KD6, and those same KD6s are worth $4,000.
Oof.
But for a lot of people, looked and balked at $50,000, barely being able to break their grandma's piggy bank to $4,000. But we looked at that as a barrier to entry. And then one of the ones that I guess is a little bit more recent is the electric costs. Now, obviously, depending on where you live, some electric costs are different. In the United States, electric costs constantly have been increasing year over year. And so regardless of whether you could afford a crypto miner, well, you couldn't even afford to run it. The average electric rate in the United States, like for me right now in Kansas, is 15 cents. And so even if I could buy an S19, I would be losing about anywhere between $60 to $80 a month just by having it run, based on the current prices. And then obviously, the other thing that a lot of people were like, I'd love to get into Asic mining, but I live in an apartment. I can't plug in an Asic, they're too loud. Or I don't have a 240 volt outlet, or it was some other infrastructure based roadblock that would keep them from getting into what most would consider the most sustainable form of rewards. And so that's how the whole idea of fraction mining came about. Is there's great opportunities out there. There's your high risk, high reward opportunities. You've got your degen opportunities out there, but in order for you to quote unquote afford, oftentimes to get into those, you need to have some form of sustainable rewards to have that passive income, with that income coming in, with the rewards coming in, to even get into those projects. So there's a lot that even within fraction mining, from a diversity standpoint, we're venturing into to offer different risk adverse options within yield. But we can get into that. But that's the whole idea and the concept of kind of the fraction mining.
Okay, so just to back up and to clarify this, you guys are going to be selling a series of NFTs, right? The cost is, let's say, $300. And so somebody's going to buy this NFT, and they're going to hold ownership out of a certain percentage. You're going to take the group sum of money, you're going to take that money and you're going to buy mining equipment, and you're going to have a facility where you're going to mine Cadena and Bitcoin and possibly other currencies. And people that own the NFTs are going to reap rewards from the labor that you're putting forth. Is that kind of accurate?
Yes and no.
Clarify that for me.
Sure. So the way that the NFTs are designed is the NFTs represent hash rate. The best idea when it comes to something like this is if you think about it, if your NFT is directly attributed to ownership of the hardware itself, think about it, then that's really no different than owning the hardware without owning the NFT. And the problem is if you own the hardware, that depreciates in value over time.
Okay.
And that's one of the risk factors of owning ASIC hardware is the longer you run it, it's got tear and wear on it and it depreciates in value. So on the broader scope, if you have the NFT represents so much hash rate out of the pool. So for the example of our launch that we're planning on for November, looking at 2,500 NFTs, the way we've strategized it is we're looking at launching about 12 containers in a 5-year timeline when it comes just to the Bitcoins. The NFTs, we're aiming anywhere between 6 to 12 terahash per NFT. The reason there's such a broad range is that oftentimes, depending on a couple of things, the container size, some containers hold 200 ASICs, some hold 250. That depends alongside of the type of ASICs that we get. I have a partnership with Michael who has direct ownership in Bitmain. So we're able to pretty much source directly from Bitmain if we want to with our ASICs. It's what really sets us apart that we're not a customer of Bitmain. We would be more of a partner within Bitmain. So when you look at the first part of it is you got the ASICs coming in. Ideally with a full container, you'd have 250 ASICs. If they're all 110 terahash, then you're looking at about, depending on how it's strategized, depending on how it works, you're looking at about 25 petahash to 30 petahash. And then you divide that by the NFTs are making up that container. So you've got about 2,500 NFTs. And then you subdivide that, and then you go into the breakout structure of how the rewards themselves are distributed, which is something that when we first started fraction mining, what you oftentimes see is most projects, even other projects that most compare us to in the space, a lot of the rewards go to the team, or a lot of the rewards go to development or some other function that doesn't directly benefit the community or the. So the way that we design it, and the way I told my team when we started fraction mining, I said I want as much of the reward to be allocated to NFT holders as possible. That way, our current design, 70% of the 70% of the old hash rate goes directly to the NFT. 4% goes into the development fund that still remains part of the community that goes into purchasing more miners on the road to constantly increase hash rate of the NFTs. And only 6% goes to the team and team partners. Okay. So when you consider the fact that 94% of the rewards that come in go directly and benefit the community, it's very much unheard of.
So let's talk about this, right? So people are going to be buying the NFTs and they are going to have a percentage of the pool. You guys are going to mint out 2,500 NFTs. Is that the first batch? I'd assume as this grows, there's going to be more containers, more space, more miners, more hash power, more NFTs, right?
Correct, absolutely. And the way that we envision it is 12 containers, because a lot of it also depends on how you set up the contract. So when you limit yourself via code, you limit the vision of the project. And that was one of the things that we had to consider is, do we really want to limit ourselves? Do we really want to limit the impact fraction mining is going to have on the proof of work community? And the answer was no. And so the way we have it is at max capacity. And the way that we've strategized it is launching a container based on a few factors, obviously based on market conditions. There's a few things that outline conditions as far as launching specifically. But the way we envision it is, why limit the impact that we could have by breaking down the barriers to mining cryptocurrency by only doing one container or one container Bitcoin, one container Cadena, and that's it. We didn't want to limit the reach that we could have with fraction mining.
Sure. So let's just narrow it down to the first batch, right? When are these NFTs going up for sale is the first question. Like when is that first, the whitelisters and then the sale to the general public? When is that happening?
We are currently aiming for around November 15th timeline.
Okay.
There's not a specific date. The way that we want to do is we want to prepare or have the community. This was an idea by Stellar, our dev, and I think it's fantastic. So we look to put out updates or major updates to the project on Tuesdays. That way, you always have in your mind on Tuesdays, updates going to come through, some maybe positive things happening, or maybe a launch or something to that extent. So you always mark that date in your calendar to keep your eye on what fraction mining is doing.
Okay.
So November 15th is a Tuesday. We're aiming for that date.
Perfect. All right. So let's say in a perfect world, 2 weeks goes by. By the end of the month, December 1st, you're minted out 2,500 NFTs. Now what happens?
Sure. So we already have the processes as our partnerships with hosting, partnership in acquisition of the miners.
So when you say hosting, you're talking about the physical location and the containers the miners are going to go in and be in, correct?
Correct. Correct.
Okay.
For those maybe not aware, I'm not sure for how many people know who Musk Miners is as a partner.
Please explain. I'm sure people probably don't know who they are, so maybe a little bit about them. That'd be good. Thank you.
Sure, absolutely. We're really excited about the partnership that we're going to have with them. They're going to be on our website as well. So one of the big reasons that we wanted to venture into a direct partnership with Musk Miners is their process of producing with a lot of most publicly traded cryptocurrency companies, mining companies, and even some of these projects is their on-grid solutions. And that is a risk to long-term longevity of the project because you're seeing what you saw most recently in New York, what you're seeing a lot in Texas is all these concerns of how much Bitcoin mining or cryptocurrency mining taking away from the grid and risking day-to-day operations for individuals. So the way that with our partnership with Musk Miners, we're approaching the mining aspect on the focus of being a energy opportunity and then harnessing that energy and therefore bypassing that energy to use cryptocurrency mining to harness the energy byproduct. What that means specifically with Musk is they use flare. And for those maybe not familiar, you got an oil well, they have to flare off the excess methane. Instead of flaring it off, what Musk does is they capture that, put it inside of a generator, and they produce electricity. Well, by producing that electricity, they want something, the value to be derived from the electricity produced. So to capture that electricity, they plug in Asic miners. Now, not only are you using what is beneficial to the environment by no longer flaring off that methane from to greenhouse gases and all the other byproducts of flaring, you're capturing that energy, cleaning it up, and mining cryptocurrencies. It's almost like putting the best of both worlds, is having your cake and eating is kind of their approach.
No, that's great. So that's the Musk Miners is a great partnership. Let's go back. We've sold out. It's December 1st. You have the location and the containers, right? How long is it going to take you to take this $750,000 raise to go out and purchase these miners for the locations?
So the turnaround time frame that we have expected is 3 to 4 weeks.
Okay. And so is that 3 to 4 weeks the miners are in the container set up, ready to go, or is that 3 or 4 weeks in receiving them and then they have to be installed?
So 3 to 4 weeks is our expectation of miners, plugging them in
and hashing away. Okay, let's just, for the people who maybe are like, man, I don't know what the hell hash power is, I don't know anything about mining, all they know is I can buy an NFT for $300. How and when do I see returns? Is that, am I waiting 3 months, 6 months? Am I waiting a full year before I start seeing returns on my NFT? Or what's the process like on returns?
That's a great question, and obviously it's a twofold question. Now, that we've designed it is as soon as the ASICs are in the ground, they're hashing away, the rewards are being accrued. Now, the dashboard itself is being hard-coded from a security standpoint. That was one of the biggest things is that we also have Stellar, which by the way, it's having met Stellar, that's one thing, just a slight tangent. It's very unique to be able to dinner and meet in person. You don't see it very often in the crypto space of knowing your developer, meeting them, spending time with them. So that's just a little tangent. But one of the things Stellar was very adamant about is the clarity and the structure of the coding. And so the dashboard itself being completely coded and all the things that we're doing, the contracts, making sure that security is our number one priority, that will be coming later. But that doesn't take away from the rewards being properly allocated to the NFT holders. So what that means is there's not going to be, with a lot of these projects, you're going to take your rewards for 6 months and you purchase your NFT. You have to wait 6 months before you see anything, and then your rewards get paid out. That's not at all how it's going to work. What you'll probably have is if the dashboard comes maybe a month or 2 months later, you have all those rewards that have accrued over that time. They are still claimable by you. So as soon as the ASICs are on the ground and as soon as the Bitcoin rewards start coming in, they'll be properly distributed based on the distribution allocation or the reward allocation distribution that we have set up. So that's the first part. There's no delay of getting rewards. There's no delay of anything like that. The second part that a lot of people want to know is really interested. They want to get their quote unquote ROI.
Yep.
That's a difficult question to answer just from a few standpoints, because there's a lot of factors that go into something that go into quote unquote ROI are completely out of
your hands.
Control.
Yep.
And so you have two factors that specifically affect it. You have the price of Bitcoin, and you have the overall coin hash rate, which then also directly impacts the network difficulty. So for us to try to speculate or try to play the game of if Bitcoin was at 30,000 in the next 6 months, you'd ROI in such and such a time. That's almost giving someone a false hope. And our whole goal is to under promise and over perform.
Sure.
That's why our approach overall is more of the service that you'll be receiving, which per NFT we expect to be anywhere between 6 to 12 terahash. And at that point, it's up to really you as an individual. Do you think that Bitcoin's going to be at 20,000? Do you think Bitcoin's going to be at 10K? Do you think Bitcoin's going to be at 30K? And then where do you think the Bitcoin network's going to be at that point? So that's almost up to the individual to hypothetically calculate what they think their returns will be. In the end, still receiving that hash rate regardless. So that's our approach. And the one thing I was speaking with another community yesterday in their AMA, the one thing that we've strategized as far as quote unquote rewards is the breakdown of the 70%, 24%, and the 6%. The reason we have so much going into the development fund is we'd rather have aspect of lower hash rate up front, growth long term. The last thing someone wants to own is something that depreciates in value over time because it doesn't keep up with trade. So it's a brief example. You could have is you buy an Asic miner, all of a sudden the network difficulty increases and therefore your rewards constantly grow down. What do? You have to go sell your Asic miner. Now you have to go buy a more expensive one and more efficient one to just constantly try to keep up the difficulty increase and your rewards going down. The way that we've strategized it is we've strategized where we can outpace or at least keep up pace with the overall network difficulty and network increase, so that way we don't fall behind the overall network. And that's one of the big focuses for us is with a lot of other communities that put so little, you make it a lot up front, but that constantly depreciates, which is getting maybe a little bit less up front, constantly appreciates as far as.
All right, so walk me through this, right? Because people they're going to be buying these NFTs, right? And they really are just getting fractionalized ownership of whatever is mined, a certain percentage, right? So talk to me about the location, right? If something were to happen, a weather event or something out of our control, are these miners going to be insured? Are they a secure facility? Do you have to worry about being robbed? Like, maybe talk a little bit more about where people's money and all of this hardware that you're going to be buying and running, where is it going to be and how it's going to be kept safe so people can get these rewards in the future?
Absolutely. That's obviously a valid question because even though it doesn't happen that
That's what
often,
I'm here for, people.
I've had the opportunity to meet with a current CEO. He's a major cryptocurrency company in Canada. His first experience to mining cryptocurrency back in 2014, first company to ever mine Bitcoin. And a year later, they had poor security. They didn't do anything. They're just doing it. It got broken into, like, massive hack, and people all their Asic miners. He gave me some insight when I talked to him. So there's a couple of things that we are strategizing and taking into action to mitigate any risk. So the first thing is with our partner, Musk Miners. Obviously, one of the things that we can't disclose is the location. So as soon as you disclose the location, then people are going to go start looking for it, right? And there's a risk factor to that. So
Sure.
we can say possibly what state that the cryptocurrency miners are in, and that's probably going to be as far as we can say.
Sure.
We also have some very unique is coming soon. I can't speak on it yet, but it will give a more realistic opportunity for you to virtually tour the mining facility. I'll just keep it at that, but it's super, super cool. When it comes to natural phenomenons, there are going to be, there's two separate ways that we've strategized to mitigate risk. The first is all the containers or all the miners are going to be on 20-foot trailers. That allows us, that was part of those contingency of having the containers at Musk Miners, is they have to be on. So that way, at any point of time, if let's just say there's a hurricane that comes in or something like that, those containers can be easily moved without question, no problem, boom, and reallocated to a safe location.
Okay.
Now, on top of that, it's an up and coming field as far as getting insurance on crypto miners. Now, we're in the process of speaking to partners as it is right now to provide form of insurance on crypto miners. There's two types of insurance you'd want to look at when it comes to something like this, especially when you're dealing with an online technology. It's from a cybersecurity, and you want more of a hardware security as well. So that way, if anyone hacks your equipment, you're protected that way, and from an online standpoint, and then you also have the hardware side of things. So we're in the process of speaking with partners as far as getting that specifically for our operation.
Okay, that's fair enough. And I think people don't really understand mining as well as some others, right? So what are the biggest challenges for a mining project? Is it hacking? Is it a possible fire because all of these machines are running together and it gets really hot? Do you need, I guess you couldn't even put a sprinkler system. It'd be more of a oxygen. What are the biggest concerns for you guys, right? What are you like trying to make sure things don't go bad on this side? Or what are you guys really focused on trying to do this? Yeah. Did you lose me?
Oh, there you are.
Oh, I'm sorry.
I think I lost the last. I think I lost the last portion of that question.
Yeah, it's just understanding what the biggest challenges for you guys are. Is it hacking, or is it more of a security concern on the ground?
Absolutely. To be honest, there's really not often that you're going to have these things catch on fire. It's a very rare occurrence, and even more rare, you don't hear of from just a security standpoint that the difficulty of people stealing Asic. That's not very common. It used to be back in the day, but you've done a lot of developments over years. To be quite honest, the most difficult thing for most projects in the mining space, and a lot of these projects that are currently popping up, some that have been around for maybe a couple of months, it is two things specifically. One, being able to acquire miners at good prices, because that directly impacts their overall ability to keep up with the network difficulty and network hash rate growth. If you're acquiring miners for retail prices, you're getting less for your money's worth per se, and then you're not able to keep up to pace with technologies from the rewards you received from your initial miners. So if you start off behind, you're going to always stay behind. And that was one of the big things. That's why we had some of the team been able to go to some of the recent conventions, see some of the new technology. Hydro cooled and hydro cooling for base Bitcoin miners is really the future. There was one, Josh, our crypto mining expert on the team. He recently went to one by What's Miner, and they've got miners there that they're overclocking to 290 terahash, which is absolutely insane. An aspect of project difficulty is having to deal with the increase in difficulty of Bitcoin mining itself is one of the biggest challenges. Maybe the one even bigger than that is the overall operating cost, because that's what you saw with, I'm not sure who, with Compute North. Compute North was more of a host, but due to them being an on-grid solution, on-grid prices and electric prices increasing, they couldn't pass on those fees to their hosts, and which they just got pushed out because they couldn't afford electricity anymore. So when you can't afford electricity anymore, you lose money mining, and then you just can't operate. You have to shut down business. And that by far could be one of the biggest challenges for a lot of these projects that are maybe on an on-grid solution or don't have the best partnership. And if Bitcoin falls down to a certain price, they may only be around for so long until they're just no longer profitable and have to close up shop.
I got you, brother. Let's do this. I always like to paint a picture for somebody that maybe doesn't know too much about mining. I don't have miners, so this is a learning experience for me talking to you the other day when we had that great conversation for an hour. Walk us through this, right? So if somebody wanted to buy a miner today, they would need to go be able to find one first of all. And those are usually what, $3,000 to $4,000, let's say, give or take. Is that accurate?
Yeah. The cost. The biggest problem isn't really the cost; it's finding a reputable source.
Got it. Okay, so it's source.
There's so many. Yeah, there's so many fake websites and fake distributors.
I'm
I
sure.
had someone the other day. He thought they went onto What's Miner. It was a fake What's Miner website, and they spent $4,000 on an Asic, and they were like, "Hey, they're not responding to me. I'm not getting any response back. They didn't tell me the item was shipped." And it was like, "What source did you use? What website did you order?" Gave us the website, and I was like, "Yeah, that's not the official website." So that in and of itself, you can afford it. You go to the wrong website, and there's your money gone.
All right, so we got source is the first thing, finding a reputable source. You're able to find a source. It's going to take several weeks probably to ship. You have to set up the miner, right? You have to energy every day for the miner, right? And it's going to be hot too, right? So you need a place that is going to be semi-cool or fans or whatever. So there's a lot of upfront costs for this, right? So you're in this from $3,000 to $4,000. It's been a couple weeks. You're mining Bitcoin, right? What is like an average miner? Because this is a question that I would be asking if I was sitting in the audience, right? If I went out and bought one miner, right, and I was out there trying to David to the Goliath on these big conglomerates who have all these miners, what does like one miner make yearly, give or take? Is it? Do you guys even have numbers like that you can share with us so we can help us paint that picture? If it's going to be too expensive to do this yourself, then hey, these NFTs are a great idea. Can you just tell us from your experience, since you have a lot, what would one miner kind of make a year?
Sure. So there's a aspect of you take just based on certain conditions, right? Because it's different if you have environments and stuff like that. So let's just take the condition that you're getting a S19 110 terahash. S19 Pro 110 terahash is 3,250 watts.
Okay.
If you there's a fantastic website called asicminervalue.com that pretty much showcases every single or almost every single web miner out there. It's 99% of them, and it shows you what the current profitability is based on network hash rate, network difficulty. So right now, I've got the S19 Pro 110 terahash. The income per day on the website shows $7.62.
Okay, and so on a yearly, yeah. Hold on. So it's $7 and what was it?
Around $7.62. So yearly around 27.
But that's not paying for energy or anything like that, right?
Right.
Any other upkeep.
You're making $7.62, but your electric cost is $11.70. So based off of current Bitcoin prices, you're losing $4.08 per day. So you're operating at a loss of $1,500 per year. Mind you, this is what most would consider in the Bitcoin mining space most affordable and one of the most efficient ASIC miners you can have at the house. Now, the only miner currently that's profitable right now is the S19 XP, the newest, greatest, best ASIC miner from Bitmain. This one has 140 terahash and uses less electricity. That one, though, you also pay a very high price. You're looking at about $5,000 to $6,000 based on the source they're from. you make $1.03 per day after electric.
Jesus.
You look at current market conditions and you say this stayed the same, because mind you, or you buy one of these things, our hash rate doesn't increase after you buy it. In fact, you have a miner that depreciates in value, and as overall around you in the network, the miner earns less. And so you have this situation where day by day, the network difficulty increases, so less Bitcoin gets distributed, or not less Bitcoin gets distributed, but Bitcoin is distributed amongst a lot more people. Per share is much less. And so it only directly impacts you negatively as far as that's concerned. So if you think about $5,000 and it costs you $1, or you make $1 a day, it's simple math. That's 5,000 days to ROI. I'm no mathematician, but that's 12 years. So based off of if that was to sustain, obviously, like I said, that kind of goes into what everyone considers quote ROI, because for some people, the next year they think Bitcoin is going to be at 60K. People may think next year Bitcoin is going to be still at 20,000, and if it's at 20,000 or it's at 60K, directly impacts the daily profit.
So what I'm going to do here, I got a couple more questions, guys, but if anybody from the audience has a question, go ahead and raise your hand. I open the request to speak up. This is very fascinating, right? Like for myself, I don't want to have heavy machinery in my house or hot things I have to update and check on daily, right? I got too much going on. For me, this would be an easy no-brainer, right? If I wanted to get into mining and make some passive income, these NFTs would probably be ideal, right? Instead of going and buying one miner, I could buy 12 or 13 NFTs and then let you guys deal with the energy intensiveness, housing the miners and all of that stuff. All I have to do is hold my NFT and reap rewards as this kind of gets built out, right? How often will people receive rewards? Is that a monthly thing? Because you guys are going to be mining, right? And then I guess there's two questions there, right? Who's got control of that wallet? Is that you that is going to be taking the rewards, selling them on the open market, and then distributing them to the 2,500 holders? Walk us through how that's going to go so people understand that.
Sure. And that's definitely a big concern for a lot of people. Different strategies as far as what people think is the best. And so the whole idea behind fraction mining is we wanted it to be as close of an experience of you mining yourself as possible. It's why our NFTs are an MP4 file where you can actually hear the Asic if you want to have a bad day.
That's cool.
You kind of want to hear the Asic, right? Mining, you can hear that whining sound that's addicting to me, maybe annoying to some. You have it there nonetheless. That's why we're wanting to bring in the virtual tour opportunity of the facility as well. So with that broad aspect and that broad approach, when it comes to the way we're strategizing it, is if we can make it as realistic to people. And you mine with an ASIC. When I have an ASIC plugged in, I get distributed. I have Bitcoin that I can see gets distributed. It's on my turn to go in and claim Bitcoin that my miner itself has provided the compute for, and then I can reap the reward. So we wanted to bring that aspect to users as well within fraction mining. This is something that's a brain idea behind our dev Stellar, who you can't say good enough things about him and his experiences, his insight and expertise to be able to make something like this happen. But our vision is to make it where you can claim for rewards as they come in, as you will. And so that way you're not having to deal with I don't want to say it's a fake appeal to mining cryptocurrency, because you don't plug in a Bitcoin miner and get an airdrop once a quarter. It's just very, I don't know the right term for it, but it doesn't feel real, right? If you wanted real appeal, mining, you have the ability that you see the compute that you're providing and the rewards directly reflecting that, and those rewards being claimed. That's on that aspect. Our goal is to make it where if you want to do it daily, obviously just realize you're going to have a lot of fees. But it's going to be an option is our approach. Now on the second portion, if the security side of things, it will be a multi-sig that will be between and others, the three other co-founders within fraction mining. So it won't be one person individually that has control of anything. And the way we have it strategized is we're looking at a few different pools. For some clarity, a pool is where instead of individual mining trying to solve a block Bitcoin, you provide your compute and pull your compute with other ASICs, and you all solve together. And one of the pools that we're exploring is where you can offer, based off of the compute, it immediately directs rewards based on messages that you input. So that way, we don't personally have to go in there every single day and say, all right, 70 goes here, 24% goes here, 6% here. It's all within their algorithm and their setup. So that way, there's not going to be any concerns of are they taking more than they should, or are they properly distributing it? How are we sure that it's being distributed? That's something the pool does on its own through its own technology.
Got it. 33 Ethereum. Why don't you go ahead and unmute, ask your question?
Yeah, I was having a whole lot of trouble hearing the audio on tactical investing was really bad, like in and out. So I don't know if I missed it, but what do they cost, the NFTs?
So the NFTs are going to be priced at $300.
Okay, got it. Thank you.
All right, my friend. Is all you had? Just the one question?
Yeah, I was just trying to hear that, but I didn't hear it the whole time. Like your audio was pretty clear, but I don't think it was just me though.
No, I don't want to know, but it's all good. And then we'll have this recorded too, so if you want to go back and listen back. But if you have any other questions, let us know, okay?
Good, thanks.
All right. And then also too, being in passive income, right? Being in crypto, we know things don't last forever, right? So walk me through this in a perfect situation, right? And I'm sure you guys have a business plan. You buy these miners, right? These 2,500 NFTs are the first, right? How often, not how often, but how long will people be able, say everything goes well, right? There's a couple hiccups, but for the most part, you guys bought the miners, you got them up, things are running, things are going good, you guys are expanding. How many months, years, I don't want to say decades because we don't use the D word around here for crypto projects, but how long can somebody expect to receive their passive income from their NFTs?
And go ahead and apologize. I was standing up, so that might have been why
You're all
the
good,
audio
man.
was coming in and out. But I'm a little closer to my mic, so hopefully that's better. Great question. So this is the beauty behind proof of work, right? And the beauty behind having something that has value that you don't have to create value for. Bitcoin itself, last Bitcoin based off of current compute is expected to be mined in 2040. If you think about that, that's about 118 years from now, which I don't think I'll still be here. At least I hope I won't be here.
I'll be long gone.
But that kind of gives you an idea as to the aspect that as long as Bitcoin is here, and obviously that's a risk that you when getting involved in cryptocurrency mining. For me, I have my beliefs in Bitcoin and I have my beliefs in Cadena. I have done my research in Bitcoin. I've done my research in Cadena, done my research in the Litecoin, which by the way are all three different cryptocurrencies we'll be mining with fractional mining. But Bitcoin, you've got 120 years. So as long as Bitcoin's around, fractional mining.
So here's the one thing I see, and maybe you can correct me for this. The 750,000 you're raising for these first 2,500 NFTs, they're going to buy equipment, right? And then the next NFT raise, you're going to buy different equipment. And then 3 years from now, that NFT raise will buy different equipment, right? But the people that are here in the beginning, that hardware and software, right, is going to wear down, right? It is going to be obsolete in a couple of years. So are you guys going to upgrade those at a cost for the business? Or is that, hey guys, you've had 3 years of returns, we need to upgrade the equipment, we need another $400 if you want to continue this? Have you guys thought that far ahead on how that's going to work?
Good question, Sensei. So here's our process. This is why we were putting 24% of the rewards into the development fund. It's twofold, right? When you have a partnership with likes and the connections with Bitmain, you have kind of the access to the newer and greater equipment. And the opportunity that we have and the way that we strategized it is we're looking at this. is what brings in the community. As far as reevaluating every 6 months is what we have on term right now, to either do one of two things: to increase by purchasing more miners, or to sell our current miners, whether that is going to be wholesale, those within the community. That's going to be one of the perks of the memberships, but you have the perks of getting the miners wholesale if you want to have the appeal of mining. And then we have also the appeal in partnerships that if we wanted to sell the miners to via distributor, we can sell those miners, take the rewards from those miners, and upgrade our equipment by purchasing better, more efficient miners. It's one of the aspects of it. Now, the other aspect, so our goal is never to, this is going to be, this miner only lasts, this miner has a lifetime of 4 years. In 4 years, you're going to have to respend another $400. That's not at all our approach. And as we launch the containers, each container, even though it's individually made up of NFTs, all the containers are all still connected to one pool. So even though as we increase, in fact, the early adopters really will only benefit as more containers, because the newer containers will potentially have better overall maybe efficiency. Maybe Bitmain comes out with a more efficient miner, and their S19 XP, that's their more recent one, will no longer cost as much, so the pricing of it comes down. We can upgrade, and therefore everyone benefits. It doesn't, because if it was the fact that early adopters got screwed over, quote unquote, for getting the older equipment, that would just look terrible.
Yeah.
We already have it implemented. As containers come online, that increases the overall pool. And as we make decisions to every 6 months, that's why we're putting so much in the development fund, that constantly increases our overall efficiency, which only goes to increase.
No, I think that's a great answer. It really makes people understand that, hey, this $300 I'm putting in, instead of me buying a miner myself, it depreciating, I'm going to have somebody else deal with that depreciation, right? And you take it over the long run. I really like how that's set up, and people that are there in the beginning, obviously, if this is highly successful, are going to reap the rewards. You guys are building a marketplace, right? I think that's the one thing we haven't touched on yet. Also, if there's any questions, guys, go ahead and raise your hands. I know he's done a great job about answering everything, but I know that sometimes people have random things they want to get answered. But walk us through the marketplace. So that's going to be a marketplace not just to relist and sell your NFTs if you so choose to do, but that'll be a marketplace to buy used miners that you guys are bringing in and out, right? You guys are upgrading these miners, and so you're going to list them for sale on your marketplace, or is that going to go on like Musk Miner or one of these other websites that you've shared with us today?
Absolutely. So there's obviously a lot of opportunities, and that would be one of the opportunities within the membership NFT. So our goal, this is one of the things that you get to learn, that distributors really take advantage of customers. And it's annoying. It's the whole business model, even behind Gold Shell. I'm sure there's people here that have purchased a miner from Gold Shell. What most people don't know is, even though Gold Shell produces them, they keep a very limited supply. What they do is they sell it off to their distributors at a higher price, then that distributor increases their price, and Gold Shell makes more money from their distributors than selling their own inventory. It's just their business model, and it's really disgusting, at least in my appeal. But in their opinion, business is business. But the person that gets screwed over is the end user. So we want to break that completely apart. And the miners that we have, because we're able to acquire the miners at ridiculous rates, we're able to also offer a much more reasonable wholesale price for those same miners to our community. We can't necessarily speak yet until contracts are signed on the price point that we're acquiring the miners for, the exact price point, but we're talking about 40 to 50% at minimum less than retail prices. And so when you look at purchasing something right now at $3,000, $3,500, $4,000, and you consider that being part of the fractional mining community, you can get it half off, because we're offering that opportunity within our community. Is a opportunity in and of itself. So that is where the inventory will be offered first, and it's going to be, as it's available, be optional for those in the community to take advantage of it. But in the end, if we're looking at increasing hash rate, increasing efficiency, offering it to the community first, and then once the community is done with their share, offer that to our other partners.
Beautiful. We've sat here. We've gone really detailed through the project, maybe the different outcomes, what we can expect. Is there anything I haven't asked? Because I know you've probably done several AMAs. There might be a question, since I'm not as familiar with mining as other people. Is there anything that we haven't gone over that you feel? Oh, you lost me. I'm sorry. Is there anything that we haven't gone over yet in the project that you feel is important? I don't know a ton about mining, so maybe there's a question I don't know how to ask, or I don't specifically understand to ask, but is there anything we've left out that you feel is important for the people still listening that are here?
Absolutely. So and that's specifically on, because right now our focus is on Bitcoin mining. And I think rightly, I put out a poll on my YouTube channel, it was like 2 or 3 weeks ago. There's an overall interest of, if people could mine a cryptocurrency right now, what would they want to mine? And if I remember correctly, it was like 50 to 60% said Bitcoin. About 30% said CAD. The people that like Doge said 9% and Litecoin. And then you had some other little ones out there. But the thing is, each individual wanted one of those for their own reason. And so our approach with fraction mining is, if you have a project, let's just take, for example, Hydro Wells Club. Let's just say you really like what Hydro Wells Club is, you believe their team, but they aren't launching other mining opportunities. And now you have to go and you got to go do your own research, go do your due diligence on these other projects that you may not like how they're distributing. You may not like their overall model of growth. You may not like their overall appeal. And so we were like, how do we solve this? And so in many ways, fraction mining is strategized to become the Amazon of proof of work. And what I mean by that is, instead of you going to, in the effort to go to 4 different stores to find all your items, most people go to Walmart or Amazon because it's way easier, and you trust those places, hopefully you do, to get your products from. And so if you're classy, you go to Target. And so we were like, how do we offer this to our community? And we were like, what if we offered diversification, which I think is huge in the crypto space, just in general. We were like, let's offer Bitcoin first, because that's what the majority of the community wanted. But there's a lot of people that want Cadena, and we can do Cadena, and we can do Litecoin merge mining with Doge. And a kind of little side point, you actually make more mining Doge than you do Litecoin, even though people call it Litecoin mining. And so we're like, this way, if someone enjoys the Bitcoin product and the Bitcoin service, you don't have to go elsewhere. They have the same community, they have the same aspect that they already love. They can get that in Cadena, they can get that in Litecoin. And then we had to think of, why would they want Cadena? Why would they want Litecoin? And it had me think of this whole strategy when it comes to rewards. And most people, when they look at rewards, they have 3 different ideas, or at least maybe, I'm not like everybody, but this is how I envision it. You have, in many ways, Litecoin Doge is your stable form of rewards. Now, what I mean by that is, Litecoin Doge merge mining, the overall network hash rate and difficulty is very slow. So what I mean by that is that it doesn't spike and hasn't constantly increased. So it's a little bit more consistent. So there's not wavering reward structure in Litecoin Doge merge mining. So that way you have your consistent rewards coming in. Now, Cadena is more of your like high risk, high reward. You see Cadena right now at $1.30. You've seen Cadena at $28.25. And so it's one of those opportunities that people look at and they're like, wow, this really could be a very rewarding opportunity. But the Cadena mining also is one of the highest increasing, just because it's one of the most profitable. So it's one of your high risk, high reward opportunity for reward yield. And then you have the third aspect is Bitcoin mining. And Bitcoin mining is the one that most people wanted. And it's because it's the one that most people are comfortable with and the one that most people trust as a long-term reward. And so that's why we knew that we could offer all 3 of these to the community. And in return, we can have all 3 different aspects and give each individual a certain appeal that they're all looking for within one platform. We're discussing some different opportunities down the road, a year from now, as far as providing an opportunity where you could even mix that in potentially down the road, where you don't have to just get one, you could be involved in all. So that 2 years down the road, once Stellar doesn't have as much on his work plate, that we could be looking at. But I think that's one of the coolest things is when you become the platform where anyone can come to and get involved in any form of proof of work, it's all available to them.
Cool, man. Really cool. Very interesting. Where can people find more information? What's the website? What's the Twitter? How do people get involved if they want to participate?
Sure, absolutely.
We lost you.
Visit the website.
Oh, we lost you there for a second. You want to try again?
Hear me now?
We can hear you now.
Okay, so there's the website. Website is fractionmining.com. Very simple. And then you have our Discord. So the Discord, Sensei, are we able to share it, or you may
Not
be able to share
it on the stage, but if I have everything, I can share it. If you want to text it to me, that way it's in one message, and I'll share it in all the channels. Even the bullish members who are not members can see in general chat. I'll share it there for everybody.
Okay, awesome. Yeah, so we have our Twitter, which is @fractionmining, the website fractionmining.com, and have the Discord. If there's any other platforms specifically, we do have a few more things that are going to be coming as far as platforms and different ways to learn more about fraction mining. As far as we're going to have Medium page, we're going to eventually have a YouTube channel just for fraction mining so we can provide community updates through that down the road. But for the time being, Discord, Twitter, and website are probably the best three.
Brilliant, man. I really appreciate your time today. QNT, I guess, has a question. QNT, want to go ahead and... Oh, damn. I guess, you know what it is? Cass gave the wrong access to people, and so now everybody can just jump up here without ever having to do anything. So I'm going to have to slap Cass on the back of the head when I'm done with this, but it's all good. QNT was up here first. QNT, what's your question?
My first question is, what is the network that we are going to mint the NFT? And also the rewards you are going to pay, like through Bitcoin or like through the coins that we are going to mining, or it's going to be like the USDC, or how the rewards is going to pay?
Sure, absolutely. Great question. And by the way, I love your Discord username. I'm a big fan of these. Great. So the rewards themselves are going to be distributed in the token that you're mining. So if you have a Bitcoin NFT, you'll be receiving Bitcoin. If you've got a Cadena NFT, it's going to be with the Litecoin side of things. That does get a bit more complicated because it depends on the pool that you're a part of. If you do use Litecoin's own pool, their organizational pool, it pays out in Litecoin. So that really, we'll explore that when it comes to that point. But yes, generally speaking, you'll be receiving the reward in the token that your NFT represents. As far as the network this is being built on, it is being built on Polygon.
Absolutely. Thank you so much. My second question is, so how we are differing from, for example, like big companies like Peer 3D or Mara or IoT Riot. So how we are differentiating, because I think they are also doing it at the scalable level actually, which similarly like we're not trying that level, but, and also you see like they are also pretty much down actually. Like how, like if you compare it actually, like how we are going to sustain actually in this one, because a lot of initiatives coming from, especially they want zero carbon and they want to go green.
Right.
So how we are going to see like in next 3 to 5 years actually?
Great question. So what you'll notice with a lot of publicly traded companies is they're all on-grid solutions, Marathon especially, and that's a big problem. It's a problem twofold, right? Because typically on-grid solutions have a form of emissions, and well, that's not very lightly looked on currently in regulation. So that's an issue that they're dealing with separately. But on top of that, they're also dealing with the increasing electric cost and that cutting into their overall profitability at the same time as they're dealing with regulation, at the same time that the network difficulty is increasing, and it's just like being attacked on all three sides. And so our approach to all three of these is solved through our partnership at Musk Miners. So Musk Miners, the entirety of the mining is a positive effect of the environment. So we have our vision within fraction mining, and our entire approach is to the unique energy mitigation service that we provide is a way to mine the toxic greenhouse gases as an on-site energy. Overall, our carbon negative computing operations utilize the byproduct of that natural gas waste, and therefore we reduce load on the electric grid. So supporting what's called a zero routine sharing initiative. So if the way that we have it set up, in I mentioned earlier within the AMA, is we're setting ourselves up for the future. Is immediately as you put yourself amongst where everyone else is or a step behind, you're gonna always be behind. And so that was one of the reasons we chose Musk Miners. It's 100% off grid, is a overall environmentally friendly solution.
Sorry to follow one more thing that you brought. You told that Musk miners, right? So are they globally distributed miners, or because the reason I'm asking is if they are like one particular state and there is a ban in something that they don't want to mine, is that going to affect this project? Or it's like globally they are distributed, so like different kinds of. Usually, what we do is in our field we call as BCP plan, like business continuity plan. If it is something got affected, then we'll move on to the next. So ensure that it keep on running. Actually, I just want to understand that about.
Yeah, absolutely. And that's a great question. So Musk Miners currently has locations in South Dakota, in Texas, in Louisiana, and they'll have locations be in Alabama. Now, we are in the process of a conversation with additional partners in Canada. So that way we can look to diversify from both the United States and within Canada. But with our partnership with solely Musk Miners, it would be a US based solution. It would be, they have multiple states that they operate in. Good question.
Okay, great. Thank you so much. Thanks for answering all these questions.
Absolutely. Thank you for your question.
Thanks, Kunti. Bullish Shark, go ahead and why don't you go ahead and ask your question, my friend?
Hey guys, hi. Yeah, I have a few questions about the miners and the whole project. My first question is, what happens if you do not sell all NFTs?
Good question. There's two opportunities that we could have within that specific. There's also two results if you don't sell all the NFTs, right? So let's just say you've got 2,500 NFTs, 2,000 of them. Because of our partners, that's not going to limit us from having a what's called an MOQ. We're not necessarily going to be contingent on an MOQ, a minimum order quantity. So if you don't have enough funds, you can't purchase miners, and therefore you have a higher acquisition cost of the miners. It's not really going to affect us because of the strong partner. So that's one of the results that will come if you don't reach that. And there's often other results for the containers now. So those kind of situations isn't going to really affect us because of the partnerships that we have in place and some of the already contingency plans that we have set up for our equipment that we're going to need. Now, let's just say you have 500 NFTs left over. Our goal at that point is to then, as of now, to list those NFTs on marketplaces at a higher price than current, to go ahead and give intrinsic value to the current NFT holder. That's currently our current approach. Could that change based on maybe a new idea or a new alternative method? It could. But that's our current approach for maybe NFTs that weren't minted during that period, to be able to put those on a third marketplace, to offer those to others, and then slightly increase them in value.
Okay, thank you. The other thing, city costs. What's about the constantly growing city costs? How big is the danger that the cost of the electricity will make everything even more unprofitable?
Yeah, so for your on-grid solutions, for those who are connected directly to the electric grid, it's always on the back of their minds. That's the one risk for a lot of cryptocurrency companies, is if you are getting your power from the electric grid, you're very much putting your whole operation at risk. That is why our partner is Musk Miners, who is 100% off grid. And with our current approach, which the price point of our operations has the opportunity to go down based on the level of partnership and contribution that we give to Musk Miners. But for the time being, until we sign the contract, I can't say the exact price, but it's less. The overall, from the energy provided, full operations is below 6 cents per kilowatt hour, representative based on the comparable version of electric versus the power produced versus via a generator. With us having an off-grid solution, we are not at risk of raising electric prices. Those raising electric prices increasing to 20% in the United States on average. So for those projects and companies that are on the grid, it's very much a high risk, and it's one of the biggest concerns for them. And that's why there's companies right now. There's one specific, Crusoe, which they are a very much energy focused company that's going into flaring or mitigating flare using the energy produced from flaring and taking that energy. And even though they appear to be an energy company, use 80% of that energy to mine crypto. They're setting themselves up for future success because they're an evolution of their operations. We're aligning ourselves with it.
Does that answer your question, my friend?
Yeah, but do you have any power price guarantee for some amount of years from them, or?
Yeah, so our contract with Musk Miners will be either a 2 to 3 year contract,
Okay.
and the price over that time frame will be locked in. I can't say the exact price yet because we haven't signed contracts, but it will be below 6 cents. And I want to explain very briefly because it's kind of vague. That 6 cents includes operations, lease, energy costs, and everything. You'll see with some, will state that their electric cost is, let's just say, 6.5 cents or 6 cents. That may not include the lease, the operations, and all that. So in the end, it's actually maybe closer to 7 or 8 cents. And they oftentimes will keep that vague. But for our side of aspect, all inclusive is less than 6 cents. And that has the opportunity to go down based on if we partner up with Musk Miners on our technology side of things with generators and stuff like that. So that's on the high end.
Okay, cool. And my last question is, where will the ASIC miners be installed? A data center or on a private property?
So they will be on a property that's
Do fucking people not listen to the AMA? Like,
controlled via Musk Miners. They will all be
could have been out of here 15 minutes ago.
Those containers will be on 20. So that allows us adaptability that if we have to move and move our operations somewhere else, they're in containers. And it goes back to your point, or back to QNT Crab's point, is what if regulation comes in? No problem. We've got our miners on container. We've got our container on a 20-foot trailer. Hook it up. We'll move it elsewhere. No big deal.
Okay. Yeah, that's all from me. Thank you.
Appreciate
Thank you
it,
very
man.
much.
Thank you. And then before I let you go, there was a gentleman, Ruben, he had a question. He wanted to understand, we did talk about it, but just for the last question, he wanted to understand what the benefits of being an early investor are. Do you just want to go over those really quickly before we finish today?
Yeah, obviously there's a lot of benefits to get in early, right? I think one of the big benefits of getting in early is from the aspect that you're getting in. It's hard to say whether this is the bottom of the market, but you're getting in much closer to the bottom than you are at the top, right? So one of the things, and this is something I discussed with the team, it's been great if we launched back in the bull market because like everybody's like super hyped about crypto, and you see nowadays everyone's like crypto Twitter is quiet. But we thought about it and we're like, you know what? Almost perfect timing that we're launching right now. That everything, these same Asic miners we're acquiring cost nearly $15,000 last year at this time, and we're acquiring them for 1/10 the cost. And so when you think about that opportunity, and regardless of where you think the currency market is going to go, I personally believe that Bitcoin mining difficulty is kind of to the same aspect that people who got into mining cryptocurrency early, who got into mining Bitcoin early, reaped more rewards of Bitcoin. And it's going to be the same aspect of the Cadena and the same aspect when we launch Litecoin. So that's the benefit, is you're getting in, being early, you're getting in much closer to the bottom of the market than you would be getting in at the top. And on top of that, you're reaping more rewards because constant increase over time. The people who got in early into mining certain of these cryptocurrencies made more rewarded, that's hard to say, more of those specific cryptocurrencies early on than they do maybe now.
Brilliant, man. I really appreciate it. I just want to thank you for the time today, guys. We've been going about an hour and 20 minutes. I think we've answered all the questions. If for Cryptonaires members, if anybody wants to participate in the whitelist, or if you need more information, go ahead and DM me directly and I will get you a whitelist spot. And what we're going to do is I'll select two winners that aren't members, and I will go ahead and reach out. I've taken a photo of all of the members that are the people that are in the chat, and so we'll send the messages out here in a couple hours to those winners for the whitelist spots. All right? Anything else you'd like to say in closing?
That's it. I appreciate the platform, Crypto Sensei. You and I have known each other for the good and the bad.
It's been a couple years already now.
It's great to have friendships like this and people in this space, and to be able to share ideas. So I appreciate you offering us the opportunity to share our passion, share our ideas and our goals. So I appreciate everyone who joined this space. I appreciate you taking the time and an hour and a half out of your day to listen to me to talk. So I hope you got something out of this. And if you also have any questions, don't hesitate to ask me. I'm one to quickly good about replying. I try my best, but appreciate your time. Appreciate everyone who is here. And thanks again to you.
Hey, I appreciate that, man. And let us know how it's going with the project. I wish you all the best. And I'll probably be buying a few of the NFTs myself to participate in mining, since I have known nothing about mining, and this is probably my step into it. So I appreciate you, man. And keep building and keep sharing. Thank you so much.
Appreciate you.
Cheers, guys.
Thank you for everyone, and hope everyone has a great weekend.
All right. Cheers, guys. Bye.